Good morning. Consumer Price Index came out yesterday, and to a pleasant surprise for most, interest inflation rate has dropped to 3%. We're going to delve a little bit into those numbers and see what's pushing those down. Because interesting enough, the highest portion, which is shelter, continues to be the highest increasing percentage in the inflation rate. And when that shelter number makes up approximately 34% of the overall inflation rate, why is that one still sitting so high? And I think that's something we have to take a look at. So let's delve into it. And here is our report from yesterday. And as you can see, the all index increased 3% for 12 months ending in June, which is great because what we saw yesterday in the treasury market is a push down from the highs we had of 4% on the 10-year treasury, which gave some relief to interest rates yesterday. But in the opening this morning, we're continuing to see downward pressure on that. So we should see actual even better rates today than the gains that we saw yesterday. Now, the big question is when we actually break out the inflation numbers. The big one is right here again, shelter. And as you can see, right now we were at 8% last month or last report, and we're currently sitting at 7.8. So that number continues to stay high, even though we're seeing reports from Zillow and others showing that rental rates are actually coming down. The last report from Zillow is we're actually down to a 4.1% year over year on rental rates, while the consumer price index has us at 7.8%. That difference, which is almost double what Zillow is reporting and others such as Redfin, Realtor.com, that doubling of the rate is keeping our inflation rate, I believe, artificially high. And as you sit there and you think about it, because we're looking at rentals, but as a homeowner, I'm thinking, okay, why would it be 8%? And I got a possible reason. Yesterday, being a homeowner in Florida, everyone knows the enjoyment we're having with the insurance companies these days. I actually got a letter from Citizens, who I'm currently insured with, stating that they are going to be switching me to another carrier. And that because the carrier doesn't have the increase isn't more than 20%, it's going to be automatic. I don't have a choice. Citizens will not renew me. And that increase is going to be roughly the full 20%. So for me, I'm seeing a 20% inflation rate on my insurance, which will translate probably to about, an 8% increase in my mortgage payment. I'm going to be going up approximately about $50, $60 a month on my mortgage payment because they are forcing me to change insurance companies. So is that inflation to me? Yes, it is. So the shelter number, even though the way they calculate it currently, which is they pick up the phone, they dial people and like, oh, if you rented your house, how much you rent your house for? Oh, are you currently renting any homes? What are you renting them for? Do you plan on increasing them? Which is very archaic, considering we have a lot of data. It was something that was started in the 80s and has not been updated since. With all the data all the tools we have, at some point that needs to be updated so it's a more accurate number. So if we pull the benefit, so we need to just take a look at that and really look at what the numbers are showing us overall. Does the inflation decrease make sense? Yes, it does, because we're seeing a lot of things in the economy that are pushing down, that the economy is slowing overall. Another index that came out this morning is the producer price index. This basically is our wholesaling index. This is the people who manufacture things. What is their inflation rate doing? And this morning, it actually came out at 0.1%, which is phenomenal. So we're seeing here overall that the producers, which makes sense because China's index inflation rate basically came out at 0 this past week as well. They're the major manufacturer of the world. So we're seeing the manufacturers' inflation come down, which will eventually be passed on to us as consumers. Graphically, if you look at it, you can see here how the PPI shot up 2021. This is when we really started to feel the inflation rate. But now you see it hovering just above 0%, 0.1, which means going further down the road, the next couple months, we should continue to see a decrease in the consumer price index, which should make the Fed double think about whether or not they want to do 2 rate increases or not. 90% of people still say the Fed's going to do a 1/4 point increase this July. But if you look further down the road to November, that percentage has dropped to roughly about 30%. So people think we've kind of hit that peak of where the Fed is going to be. And maybe after the first of the year, maybe we'll get some relief. Normally the Fed will peak and then leave it there for several months, which I'm hoping to see. Leave it there, do your 1/4 point increase. It's pretty much already been priced into the market, and then let us sit. Let interest rates, mortgage rates solidify, because once they solidify, I think you'll see the market start to pick up and recover a little bit. Well, what has it done for us in the past couple days? The CPI numbers. This is where we were, roughly 4.048% before the inflation numbers came out. And today, right now, we've dropped to 3.8%. So that's 20 basis point drop is going to provide some much needed relief in the mortgage interest rate market. We really need to see this drop back down to that 6.5 level. 6.5% interest rates seem to be where people still felt comfortable going out and looking at homes. Once it broke that 6.5, the affordability rate just became unacceptable, too high. Things just became totally unaffordable for people. It pushed them beyond their point of where they felt comfortable they could buy a house. And what else is going on in the economy currently? Well, what we're seeing statistically is bankruptcy filings are up 17% from a year ago. Chapter 11 filings are up 9%, and individual filings are up nearly 18%. But this is the interesting one. The subchapters, the small businesses, are up 111%. So we're seeing bankruptcy filings go up. We're seeing delinquency rates, multifamily, which is your commercial paper, That is spiking. We're at nearly 2%, 2% delinquency rate on multifamily homes right now. And then in other areas, we're seeing, again, large real estate investment trusts, which is commercial paper, which is tied to the regional banks, letting go of properties. We had one this week that is returning 19 hotels to the lenders. And this was because it wasn't affordable. Ashford Hospitality Trust just decided it wasn't affordable to do a refinance because the mortgages were due. So they're actually turning over roughly $1 billion worth of loans back to the lenders. Banks don't want them. What are the banks going to do? They're going to take them into receivership, try and operate them. So they're going to end up more than likely selling them at a loss. So again, continued strain on that commercial market. And as long as we have that continued strain on the commercial market, I think it's going to continue to push us into a recession in the fall. And that may actually help push rates down overall and make the housing market a little more affordable for everybody. So let's take a look at this week's numbers for the Orlando area. Our sales of our single family homes, we actually took quite a drop. There were only 348 closings for the week, which kind of expected that. We're mid-month, generally mid-month, a lot less closings go on, but also with the interest rates taking a spike over the past several weeks. Nice thing is our inventory did increase by almost 100 units. Love seeing that continue to go up. Overall, original list to sales price, a number we always love to look at, and final list to sales price really haven't moved too much. We're sitting right at that 98% mark. So you're buying a $500,000 home, you can expect probably about a $10,000 negotiation in there as far as the final price is based. And as you can see, our average price actually dropped quite a bit, but our median price has held steady. And I don't expect this to move too much in one direction or another unless we see a real big interest rate drop. Then I think we're going to see pressure upward because of lack of inventory. And as you can see, weekly sales took a huge drop down to 348. But this was the good part of the report. For the first time since March of this year, early March, our inventory is actually higher. We're only 2 units, but we are above the 4,000 home mark in our inventory, where we were at 3,900 back in March. So our inventory continues to slowly but surely creep up. And this number since January has dropped. We were roughly about 16% last week, and we're dropping to 14%. So that inventory's got to continue to grow. It continues to grow. It will continue to help level out the prices overall and make it a bit more of a balanced market. It's still a seller's market. If you look in each subdivision around Orlando, you'll see that there may be 1, 2 homes for sale in that subdivision, and that is it. So until that actually starts popping up, prices, that median price is going to hold steady. And same thing in the condo market. Weekly sales last week actually dropped quite a bit for the condos, but our inventory in the condo market has actually increased, and we're actually positive since January 1st, which is wonderful to see. We're at nearly 1,600 units for sale. I'll gotta tell you, a lot of them are still going quickly. I had a client who we've been looking for, and he took a couple days off, with the 4th of July, and the house is, 2-3 days. The condos were gone before we could even get in a chance and go see them. So inventory is still tight. Things are still moving relatively quickly if they're priced right and presented right. So thank you for joining us this morning. Always love coming to you guys on the Thursday mornings. Any questions, or if there's anything we can help you with, always feel free to reach out to us. Please like and subscribe, and we'll see you next Thursday on the Orlando Real Estate Buzz. Take care.